afternoon, folks. It's August 8th. It's a Tuesday. It's summer still, just in case you've been missing it. It's a market roundup. Let's jump into it. I've got my 2 cents. I'm going to share some trades and ideas with you. Just make sure you take whatever you get from this class, run it through your own risk parameters, take responsibility for the outcome. You know the drill. We're going to go see if there's any news out there that might have driven these markets. We're going to break them down technically and see if we can give them a scoring for the week and the subsequent month, along with a sector heat map to see what's been the most active for the day. And as always, we're going to go through some of the bull, sideways, and bearish setups we've been bouncing around here at the Maverick community.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
Moving into the market analysis, you'll see that it was just a pull from the push that we saw yesterday. Yesterday we had a little bit of gains, and today we have a little bit of losses, not by much. What happened today? Nothing. The markets look to steady themselves after last week's slide, and that's about it. Not a lot out there that's driving the markets one way or direction. Not a lot of fear, not a lot of worry. We do have some economic reports coming up here this week that I'll touch base on, but not a lot in the headlines to really do anything. Just your average bland summer day. How did we finish? Well, the Dow, the S&P, just shy of 1% to the downside. The Q's shy of a 1% full move, and the Russell's right in between the two, right? 0.63%. Oil up a little bit. I think oil's had a little bit of a surge as of late, and gold down about 0.5%. But for gold, that's kind of a push-pull up, back and forth. If you take yesterday's action, you take today's action, this really was a wash. Take a look at the advanced decline line here. 61% declining, 34% advancing. Not a lot going on. Below the 50-day moving average, 57% of stocks are still above that average. I've seen that go from up to 60 and down to 57 and back to 60. So it's just a little bit of a push and pull here, and we'll get in the charts here in a second. Well, actually, let me jump on the chart right now, and let's discuss it. So what I've noticed overall is a pullback, and this was something that we talked about a few weeks ago. We had a really big candle here the end of July, and it looked like it was a dark cloud cover. It was one, or a bearish engulfing, all sorts of cool patterns kind of jump out at me. But it was going to signify, or it usually signifies, some corrective action. Had a little bit of a gap here, and I think a lot of that had to do with that downgrade from Fitch last week. But it was kind of shaken off. The markets, I thought the markets used it as an excuse to start to sell off, which it looks like the majority of it stopped on Monday. So we had a gap up. It did trade a little bit higher, and we closed to the positive side. You can see here we did close negative, but more of a shadow. So I don't see this as a catastrophic fall to the downside or massive exodus. This is just some profit taking at a pretty nice, clean area to do so. And we still have pretty good support back here, and this is kind of the line in the sand that I'm looking for. So I do expect this weakness to continue this week, the rest of the week. I do think it could be a little bit more volatile. Well, let's jump into, I got the S&P up here, so let's pull up the intraday chart, and you can see that we had the gap down in the morning, but since about mid-morning, we just slowly climbed all the way back up. So we did close negative for the day, but well off of our lows. And when you get that type of action, then you've got a market that's kind of reluctant to sell off. This is more of just shaving and profit taking. So I'm going to keep that in mind as I watch what the S&P does here as it approaches its 50-day. Now this is my line in the sand. Let's call that about 445, but it could get down to that 440 mark and hit off that rising 50-day moving average. This is still an overall bullish trend. Now I won't spend too much time on it because the Qs is exactly the same, but let's take a look at it anyways. And you can see it's got that exact same pattern going on. It's sloping a little bit lower, but this is pretty much already at the support levels that we saw there mid-June. But it still has room to go before it hits its 50-day moving average. Now, I would not be too surprised if I saw a little bit more flexing to the downside, maybe hit the 360. I think Corey made mention of this on yesterday's update, kind of continuing or developing that ABC pattern, if you guys are Elliott waves, in that little short-term recovery. That could scare some people out and maybe really test the markets before they turned around. I think a few things might catch this. If before that would happen, I think if we see continued strength in earnings or maybe a little bit of good news, we do have, I'll just say it here now, the CPI number coming out this week, the PPI after it, jobless claims. I've got the slide here for it in a second. So those could rattle the cages. But if we get a good CPI number, we continue to see some good earnings, then we might not get that pullback as deep as one might have thought. So let's just watch and trade the markets in front of us. Moving on to the heat map. Yes, we were down overall, but not very large. Take a look at some of these bigger swingers here. Apple up about 0.5%. Apple didn't do very good on its earnings. It's been kind of climbing back very slowly ever since. Microsoft down, Nvidia down, all the things that have been doing very strong, just giving a little bit back. Eli Lilly had its earnings, so it's just going to be a bright star. And you guys will notice that Duke Energy announced this morning. So you will see some big green and some big red, and that's going to be specifically to earnings because we are still in earnings season. So keep that in the back of your head. What am I going to score this? I was debating at a 0 for the weekly outlook. I went to a -1. It's just because we slipped below the 20-day moving average. My monthly outlook has stayed at a +2. For you guys that aren't familiar with me, I rarely put +3 or -3. I'm usually somewhere in the docket of 2.5 to 3, just because that's just how I roll. So +2 is about as bullish as you can get. I do get more bullish with pullbacks that get confirmed. So I do like corrective action before I make a directional move. And in this case, this bull pullback looks nice and healthy on this SPY right now. But I am going to give it a -1 or even a 0. I think we kind of plateau here or even come back to those June highs, specifically in the SPY, before we can pivot. And I will immediately take that from a -1 to a +1, +2 for the weekly outlook. I love the confirmation of a corrective action move before we move higher. Let's take a look at a few trades. You might have seen these been kicked around a little bit. I didn't have a lot that really triggered, but I did want to make note on the bear side. If you guys see Kellogg's or General Mills, GIS, these things are just getting hammered today. It's not my example, Newmont is, but there are some very specific stocks out there that are really getting smashed. It could be a lot with earnings or the industry itself, so make sure we just triple check. On the bull side, I did like Kohl's, one we talked about on Friday's trading room. It's got a good little pivot point. I just got done blabbling to you guys how I like corrective action. And guess what? It's got a bull pullback that's got a nice little hammer candle. We'll see here in a minute. And then there are some sideways trades, but make note of these sideways trades. You need to give them a wider range. So let's jump into them. This is Kohl's. Talked about this thing on Friday's class, and I just immediately liked it. I like the hesitation here with these dojis. It looked like it was trying to plateau at this point, but I love me a hammer candle. I'd like to see this maybe 1 or 2 more days a little closer to that 20-day moving average first, but that's all right. If it wants to turn here, I'll be ready for it. So confirmation would be a trade above that previous high. But a target on this could be more than just that 30 level. I could see this maybe climbing back up to way back. Maybe you guys can't see it here, but back to 32 where it was basically the end of February. But the way that this has been climbing, I do like this nice, slow, steady climb. It could hit 30, pull back, maybe go to the 31, so on and so forth. So if it is going to continue that trend, you could play something accordingly. I believe the discussion was for a diagonal spread, but hey, you can always rephrase it that class. But it's looking pretty good, pretty strong. There's a couple other in that sector if you guys want to look at it. I also liked Walmart, which was also on it, more of a high base. But Walmart does have its earnings coming up. Let's move to sideways. This is OKTA. And why I liked it sideways is because of another hammer candle. Now, I know I put a lot on a candlestick, but I'm also putting a lot on the emphasis of the markets. And more importantly, right through here, you can see that this has a really good presence. I'll do the whole chart first here at 70. So when it's consolidated all through here in end of June, early July, it looks like it touched it here a little bit. Mid-July, it's right back to it. So I don't think this thing is I wouldn't be surprised if it was to move maybe back up to the 75 mark, but come back down. So when I say sideways, folks, let me draw another line here. I'm thinking more of this type of sideways. Give it a range-bound stock right here. ExxonMobil looked the same, probably a little bit tighter on that chart if you want to take a look at it. But hey, it's a sideways trade. Check it out. This is Newmont. Newmont's been on our bear watch for some time. Sideways for a while. I had it sideways through June, and it worked out for a while. It popped its head back up and then came back down. But this slide that it's had down at the support levels has just shown a little bit more. It's gotten me a lot more leery. I did like the initial crossover and as it was breaking at this level. But since we're back down and threatening this area at around 40, and then we have a whole new bag of potential move to the downside. So that's kind of what I'm looking for, is maybe consolidating there or rolling and falling a little bit further before I jump into it. Basic materials, we've seen gold go back and forth, up and down all over the place. We'll see what happens if the Fed continues on their pace to raise rates and what the dollar strength does accordingly. All three majors remain in bullish areas. No more than profit taking for now. That's all I got. I mean, I guess I could dig and I could find good news and bad news. Just depends on where you're looking. But if there's nothing immediately jumping in my face, then it's just not that big of a day. It's a summer day. It's Tuesday. Let's not make more out of it than what it was. We had an up day yesterday and a slight down day today. And if you take the two side by side, we haven't really gone anywhere. So let's focus on the slide that we came out of last week in the support areas as we continue this week. CPI jobless claims on Thursday, PPI consumer sentiment on Friday. The CPI, as always, it is a big inflationary gauge. If that thing comes in lighter or in line, these markets might be done pulling back. And we could see that turn right around and start to move higher. Rivian and Take-Two Interactive earnings, there's a bunch out there. These two I thought were fun. They popped up. Rivian was actually down 2% after it announced. The announcement wasn't good, but then it said it was going to create more cars and fill more orders. And it's up about 0.5%. So that's how much fun it is to play earnings. Take-Two Interactive up over 4%. All right, folks, thanks for joining me as always. And we'll talk to you next time. Bye, everybody.